Hey, what's up, everybody? Dan Plata from Blue Skies Admin Services. This video is diving into the window cleaning target budget for 2021. I'm going to screen share and I'm going to work right through that budget. It's already pre-built, so we're just going to put in some sales estimates and you're going to see how it works. I'm going to explain the logic behind the buckets, the different percentages we're using, and kind of why they're where they are, just to give you some framework. And then once you get this thing in your hands, and you want to start using it, I'll tell you how to customize it a little bit, where to put the actuals in as you go, and we're going to try to get it so that we can build it and it'll download right from your QuickBooks and pull the actuals in for you. You didn't hear it from me, or you did? Anyway, that's me trying to be funny. Doesn't work most of the time. Ask my kids. All right, so let's do a screen share. Let's nerd out on some budgets. Here we go. Which screen is it sharing? I think it's sharing the right screen. We'll find out once I upload the video. Cool. All right. So this is a target budget. This is what it looks like. I'm going to say right from the bat, this is going to look like a lot to anybody. A, because there's a lot in here, because it's an already made budget, right? It's not like a blank template. This thing is built. B, there's no like shortcut to easiness when it comes to building a budget, which is why most people don't do it, or their budget's not specific at all, and then they don't stick to it anyway. A real budget is kind of dense because there's a lot that goes into it. So I've spent multiple hours. I won't say 100 hours, but somewhere between 10 and 100 hours building these out. So here we've got window cleaning target budget. I'm going to kind of just go top to bottom and explain how to use this. I am not going to get into sales and marketing, payroll, or assets and liabilities. Those are bonus tabs if you really want to nerd out. And wherever you found this video, there's going to be videos for those explaining how to use each of those tabs. Today, we're just going to talk about this main pre-built budget for you and some quick and dirty ways to customize it without having to get too much into the weeds. So the first thing you'll notice is business days are at the top. I think that's super important to recognize. Like here, February, 20 business days. March has 23 business days. So you're going to see a 15% swing in your revenue and your expenses likely, just because one month has so many more working days than the next month. I just want you to be aware of that, because I think people overlook that and they're like, oh man, I crushed it this month. And then, oh man, I got crushed this month. And it's like you did the same, per day, just one month happens to have 3 more days in it. Similarly, and actually even a bigger impact is how many payrolls land in a month. So, and this payroll line actually feeds down through the payroll lines in this budget. So that's all factored in. So if you pay weekly, chances are you enter payroll by Wednesday, it leaves your bank account Thursday, gets to your employees on Friday. In general. So if that's the way you pay, this is already built out. You're going to have 4 payrolls in January, February, March. April is going to have 5 payrolls, which means you have a 25% increase in your labor expenses in that month from the previous month, all else equal. And there's a few different months. July has 5, September has 5, December has 5. That's normal. It's not bad, but most people don't budget for that. And then they look at a month and they're like, oh man, my payroll was way out of line, or my cost of goods sold was way out of line. And it's only out of line because it's supposed to be. You had 5 payrolls that month. And like I said, that feeds in here below. So the first thing, there's spaces in here for you to put information. Most of it's filled out. The one thing that you need to start with is how much you're going to sell per month. And so I've just put some numbers in there, just have something. But anything that's in like this dark blue, you can type into. Dark blue means you can put stuff in there. So let's just say we know like April gets a little busier. We're going to put 60,000 in there. We're going to put 70,000 in May, maybe like 80. This is like in Minneapolis where I'm at. We get this big spike. We're more like 5,000 in January and February. And then we start going, and then we kind of dip in July and August. But October, we're going to crush it too. I don't know. I'm just making stuff up now. So there we go. Sales numbers are in. You'll notice that every number below adjusts because of that sales number. So there is a pre-built percentage on how much you should spend for each single line item in your P&L based on that revenue. So I'm just going to crank through what we're looking at in window cleaning. So window cleaning cost of goods sold being any expense that you have that's happening out in the field. Wages, obviously a big one. When we build this target budget, I'm not going to like break out the payroll taxes from the wages. Just in general, your fully loaded wages should be about 35%. I have workers' comp broken out separately because that can be very dependent on if you're in like a state pool fund or you're in a monopolistic state or, you know, whatever workers' comp you have, it can swing a little bit different. So I have that one broken out. But in general, like we're shooting for 45% in this bucket. Wages and payroll taxes should be about 35% of that. You can see like uniforms, apparel. I would even put like safety stuff into that. Like if you're putting stuff on the person out in the field to do their job, cost of goods sold, 0.5%, workers' comp, 2.5%, damages and repairs, because you're going to break stuff and, or, you know, ruin landscaping or whatever. You're going to have to pay for stuff at customers' homes because we're doing stuff offsite in customers' homes. 0.5% for that. Fuel around 2%, and I'd include in the fuel parking, tolls, basically anything to get you to and from a job. Merchant fees, we put that in cost of goods sold because part of doing a job is getting paid for it. I don't know about you, but I sure like getting paid when we go out to do work. So that's part of doing the job, and you can tie that cost back to an individual job and say, here's how much we paid for merchant processing for that job. I don't have anything in for equipment rental. You'll notice some of these are just blank. I don't plan on using subcontractors. I don't plan on having disposal fees. I don't plan on renting equipment necessarily. Supplies and chemicals, I would say like supplies and chemicals should be anything that you're using up at the job site that like physically gets consumed at the job site. Tools and equipment would be things where you're like using it job after job after job. So tools and equipment in a window cleaning thing might be water fed poles, ladders, squeegees, stuff like that. Supplies and chemicals would maybe be, you know, if you're using Dawn dish soap or if you're using steel wool or, you know, different things that you're like using up and they use up faster at the job site. I'd put in supplies and chemicals. All that adds up to 45%. Now, as you go through the year, you can see there's a spot to enter actuals. So you put your actual sales in here. You put your actual expenses in here. And it's going to do a couple things. I'm just going to put like $5,000 in here so we can see what it does. And I'm going to delete that later. But you can see it also will calculate the percentage that you're spending on everything. And I already found an error here. I got to figure out why it's not. Oh, it's not calculating this percentage because I don't have any sales in here. Let's put some sales in here while we're at it. Let's say we actually sold. It doesn't really matter because I'm just going to delete this, but just so you can see what it does and know what to expect, I think it's important. So that would be if we had $120,000 in sales, and you'll see it'll tell you the percentage that you're spending on any given thing. Let's make this an actual percentage here. So it's saying we're spending 50% on wages, and we're 15% high versus what we wanted to do. Up here, the budget is 34.8 on those wages, and we're spending 50%. So it's going to say we're over by 5%. We're spending 50% compared to the 45 that we want to do. We're over by 5%. It's going to color it red. Here, it's going to color it yellow to give us the identifier of like, that's where we're spending too much money. So that's what's going on there. So basically throughout the year, you're going to put actuals in here, and it's going to go and like calculate the percent of spend in actuality, compare it to what you budgeted, and it's going to mark it green if you're in line and yellow if you're out of line, and it'll color the bucket red if the whole bucket is out of line. The yellow is just going to be the ones where you actually want to scrutinize those individual line items. So made to easily identify where you're missing the boat maybe. So now after cost of goods sold, that's the money we get to like keep and reinvest in the business, right? But every time we go out and do a job, we basically pay those cost of goods sold fees. So now we have gross profit being how much do we get to take after we do the job and then cover overhead expenses, reinvest in marketing, maybe pay our administrative people or salespeople. So let's go through that quick. In a window cleaning space, we budget about 15% for marketing. Now you could spend 3% on marketing, or you could spend 30% on marketing. It depends on how aggressive you want to get, how you're marketing, if you're doing yard signs and flyers, or if you're going on the radio and the TV. But in general, on average, 15% is a good level for like aggressive, but not like balls to the walls growth, if I can say that. Well, I did say that, so oh well. And we break marketing down into charitable marketing, website and software like infrastructure to support your marketing, then the actual ad and awareness spend of getting your name out there in Google ads and Facebook ads and Home Advisor, whatever you're doing. And then labor contractor would be any like professional that you're paying to do marketing work. So if you hire somebody to do SEO or to do your social media stuff, they would go into that labor contractor bucket. And you can toggle these percentages around. The big thing is that in general, you want to be spending, somewhere around 15% would be a reasonable level for a window cleaning business. And again, then you just put your actuals in here. It'll do that same calculation based on your actual accrual sales, and do that math. I'm just going to jump back up to the top here for 1 sec to explain what I meant when I just said accrual sales, because that could be kind of trippy. You'll see there's 2 different lines here to fill out for sales. Cash accounting sales is pretty much, if you're doing less than 5 million, you're probably paying taxes on a cash basis. So cash basis accounting is when you deposit the money. Accrual basis is when you actually do the work and invoice it. So the cash is super important because we want money in the bank to run our business. And that's how we get taxed. So like when we look at this P&L from a cash basis, that's what we're going to expect our taxes are based off of. However, to assess how we're doing operationally, we typically want to look at our invoice sales because that's what drives our expenses. We don't pay our employee based on when our customer paid us. We usually pay our employee based on when we did the work, even if the customer never paid us or pays us 2 months later. So to assess how productive our employees are and how well we're managing our expenses, we usually look at the accrual sales. And so all the percentages are based off of accrual sales. There is a line item in here for you to put in the cash sales deposits for the month because there's a section down below that digs more into the cash flow of your business and how much, for taxes and that sort of thing. So that's why there's those 2 different line items there for sales. All right. And you can see I've got gross profit in here and it says based on accrual sales. So again, we're measuring the operating results based on accrual sales. So advertising and marketing, you put your actuals in. Next would be admin. Admin's going to be pretty much anything that's happening in the office. If you're paying yourself a wage, not if you're taking distributions, but if you're paying yourself a wage and having payroll taxes out of that, you might be admin. You might be like 50% COGS and 50% admin. You'll have to figure out how to divvy that up. In this case, we're saying about 12% of your revenue is going to go to paying people, yourself included possibly, to do administrative work, answering the phones, out in the field selling, whatever it is. There's a line in here for owner salary. I don't put anything in that because to me, you're just another admin doing a job in the office. Eventually, you're probably going to fire yourself from it and hire somebody else to do that work. So I just put it all into admin. And again, I don't break out anything specifically for payroll taxes because it's all just built into this 12%. You're probably going to have some fees, payroll expenses for, like if you use ADP or Sure Payroll or QuickBooks Payroll, there's fees that get generated for just processing payroll to go through somebody else's system. And so there's a line item for that. There's accounting services to pay nerdy bookkeepers like me to keep track of all this stuff for you. Legal services, consulting services, and then just kind of like piddly bank charges, office supplies and expenses. QuickBooks always defaults office expenses with software. Those are 2 totally different things. Software is down below. You'll see it in a bit. But this is just like for computers, printers, paper, pens, like things being used in the office, not software to run the business. And then just a little bit for other general admin expenses, the other stuff that doesn't fit anywhere else but happens in the office. So that's admin expenses. And then again, a section to put in your actuals. Fixed expenses. These are expenses where you're probably going to manually override this, and I'm going to show you how to do that in a second. It's built based on percentages, but a lot of these expenses are going to be the same every single month no matter what because they're like predetermined, locked-in expenses. They are things like if you pay health insurance for yourself or your employees, liability and auto insurance, same payment pretty much every month. Interest expenses, that might feed in from this asset and liability tab. There's and your payroll numbers might feed in from this tab. Your sales and marketing might feed in from this tab. So you'll see C&L tab, which just means there's something here that's feeding in here. Check out the asset and liability video and you'll see how that works. I won't get into it now. Actually, I'm gonna do this, just sneak peek. I'm gonna toggle it off. So I have 0% for interest in there now. Dues and subscriptions would be things where it's like a monthly payment that you signed up for. It might even be like leadership dues or educational dues, but it's a predetermined expense that's hard to cancel or has like a fee to cancel it. Rent would be in that bucket. Software stuff, like here's where software falls, your CRM or any other non-marketing related software. You know, you can do a little bit of marketing with your CRM, but it's mostly for operating purposes to route and collect payments and like do stuff behind the scenes. So your CRM would be in here. Your phone system would be in here probably if you use like a VoIP phone system. And then any other like monthly bills, utilities, phone bills, internet bills, whatever. Again, those are like just kind of, you're not going to cancel them. You're just going to maybe switch from vendor to vendor, but you're going to do it very rarely because it's a pain in the butt. So that's fixed expenses. They're generally like set in stone, left alone for a while. And you're probably going to want to do $1 override for it just based on what you know those bills are going to be. You want to target 5% in that bucket. But your insurance probably isn't going to go from $100 to $1,400, you know, back down to $300. It's probably going to be the same every month, regardless of how much you do. So this bucket in general, you may want to override. And then the actuals will go in here. Last bucket is variable expenses. It's another overhead expense, just like your fixed expenses where it doesn't necessarily drive revenue. It's just stuff that you need to run a business. Variable, meaning it's not like predetermined. Things come up, either opportunities or issues, and you solve it with money. So auto expenses like tags, licenses, penalties, whatever. Educational events, I would say these are for like non-recurring events, but like, are you going to go to ResponsiCon this year or not? That would go in there. Are you going to do this event or that event? Or are you going to invest in this thing to help your people develop their leadership skills? All of that would be like one-time things that would go in there. Meals and entertainment, employee engagement stuff. Let me just say those kind of overlap, but are different things. If you're like going out to lunch with one employee, meals and entertainment. If you do something with the entire team, like a holiday party, or you take everybody out to dinner or something like that, employee engagement. And there's tax benefits to doing employee engagement stuff versus meals and entertainment. Recruiting is a huge one. I see people not investing nearly enough in recruiting to go get A players, but that's in there, and make sure you're allocating enough money to like go get an awesome team. You deserve an awesome team. Auto repairs and maintenance, tools, repairs and maintenance, shop supplies for stuff that like you buy tools, but they don't go on the truck. If they go on the truck, put them in tools and equipment, you're using them out at the job. If they stay back at the shop, wrenches and this and that, shop supplies. Travel meals, other taxes, licenses, penalties, permits, there's a little bit for that. So you can see there's just like random little piddly expenses in variable. It all adds up to 5%. Don't worry about if you're spending too much on any one of these things, but look at the bucket in its entirety and try to stay frugal and keep that bucket below 5%. So if you're doing that in the window cleaning space, you can see you should be right around 15% net profit margin for the year. Now, if you have assets like vehicles and maybe a water-fed pole, that would be over $2,500. You're going to have some depreciation expenses as well. That would come in from the assets and liabilities tab, or you can just enter it straight in a section below this. Below the, if you feel like diving in farther, these two sections could be useful. Hint. So if you want to dive in farther. But here you can see, here's your budgeted operating profit. And then here's your actual operating profit right below that. And I did include the cash-based operating profit here too, as well as the accrual-based operating profit. So the two sections below, and then I'm going to wrap this video up pretty quick here. There's a section for taxes, which then would include those depreciation expenses for assets, which is going to reduce your operating profit by those depreciation expenses. So that's for tax purposes. And this is based on your cash sales, not your accrual sales. And then there's a cash flow section, which would include if you're paying yourself with owner distributions instead of payroll. And just to make sure you're clear on that, If you're not paying payroll taxes on it like each week and you're just taking $500 out or $1,000 out or whatever, it's a distribution. It doesn't go on your P&L. It goes on your balance sheet. That would go here. If you're contributing money back to the company, like from your personal bank account, putting money back into the company bank account, contribution. If you're paying down loans, the principal portion comes here. The interest portion from the A&L tab here goes into your fixed expenses. And then any other cash inflows or outflows from borrowing money or paying money back that you borrowed. And then you've got cash flows, budgeted cash flows and actual cash flows, how much money is actually coming and going. So that's the entirety of that main sheet. Like I said, an area for you to put actuals each month as you go. And now let me just, before we sign off here, talk to you quickly about how to override stuff. So first of all, you'll see there's like 2 different sales lines up here. So we filled out one. Again, if you want to get really nerdy, you fill out the sales and marketing tab and it'll actually feed in to here and it'll override what you typed in. There's a use little toggle here. And if you want to use it, then all of a sudden it's going to pull that data in and it's not going to use what you typed here. For now, I'm going to turn that off. Beep. There's a different video explaining how to use this section. So right now we're just using here and you can see it went back, like it's all feeding off of this line, but it went back to this and feeding off of what we manually typed in. So now for different expenses, if you're like, hey Dan, I already know that my labor is 37.5, you type it in and it fixes everything for that. And again, it also aligns with which months have 5 payrolls. So you can see there's a big, awesome formula in there to manage all that. Now you might say workers' comp, I'm shooting for 2%. So it changes all that. And then even after that, you might be like, well, but I pay it, every month. And so, yeah, it's going to be around $10,000. Let's put a little cushion in there. I want to override it and just say it's going to be $1,000 a month. And boom, it changes to $1,000 a month. So the way this is built is it's going to default to the industry target. If you put a % override in, that'll override the industry target. But you can see if you put $1 override in, that then is going to override your % override. And so it's kind of like a 3-step process to decide how you want to budget it. That works in every situation here. So % override overrides the industry target. If you say, I'm only going to spend 10% on that, boom. That was a weird noise I made. And then the other one I was going to show you is fixed expenses. In general, we know liability insurance. Again, it's like, I'm not going to pay different amounts each month. I'm going to pay what my liability insurance is. I know my rent is $1,500, and so I'm just going to type that in. Now I'm paying 6.7% instead of 5%, and so I'm over. But these you can like dial in more to where you're actually at, and then scrutinize them from there and figure out how to get it back to 5%. That's it. I'm going to leave it there. The sales and marketing, the payroll, and the assets and liabilities, I'm going to go through those in a separate video. So go check those out. Stop, share, stop recording. I'll see you guys in the next video. Enjoy your target budget. And remember, if you find something that isn't working between all the tabs and not adding up right, and it's a legit error on my part, A, I'm going to go in and fix it and reissue the sheet to everybody that downloaded it. B, if you're the person that finds it and lets me know, you get a free P&L review for an hour, strategic breakdown with me of your P&L, which is $200 value. So go break my spreadsheet. Thanks, guys. See you on the next video.